Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Hormuz deadlock. Oil edges lower after a six-session rally. Traders wait for signs of progress as Washington and Tehran harden their positions. And Asian stocks rise as a subdued U.S. inflation report eases fears of an imminent Fed rate hike. South Korea's Kospi is entering a technical bull market on a rebound in the AI trade. And yen under pressure as the currency approaches the key 160 level against the US dollar. Traders brace for a possible intervention from Tokyo and Washington. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. A quick look at where risk assets are sitting this morning in Dubai. We are taking a look at U.S. futures flat this morning. The S&P did close about 0.3% higher. NASDAQ 100, 0.7% higher. We're taking a look, of course, at the AI trade that seems to be easing from some of the sell-off that we had seen in recent weeks. Again, individual names in the United States keep up an interesting story. One name that was interesting, that was dropping in the aftermarket is Cisco, and that is, despite the fact that there was an earnings beat, it just failed to live up to analyst expectations and to the market expectations. And then Cerebras, which fell 17% after reporting a decline in hardware revenue. And then Asian equities 1% higher. The Kospi in South Korea more than 4% higher, about to enter or set to enter a technical bull market. We've got Winnie in a second to talk to us about just what exactly is happening there. And then Brent crude prices easing this morning, 0.5 lower, snapping that 6-day rally over the escalations in the Middle East. And of course, that's a big story that we will cover momentarily. And then, of course, the yield on the 10-year notes in the United States is something we are monitoring closely. 2 basis points lower this morning after that subdued inflation report. 0.2 or 0.2% in July, the increase in U.S. consumer prices, that is in July compared to June, in line with estimates, and money markets are now assigning less than a 50% chance of a September Fed rate hike. So there you have it, a subdued CPI report that is leading to a decline in the yield in the 2-year notes, but also in the 10-year notes. Now, for a look in Asia, for a look at what is happening in Asian markets this morning, we've got Winnie Su standing for us in Hong Kong. Winnie, what do you have for us?
Yeah, good morning, Abir. A very positive session in Asia today with the MSCI Asia up about 1% here, taking it to its highest level in more than a month. Now, as you mentioned, it's investors cheering for that softer U.S. CPI numbers, and also with oil easing a bit of those gains. Now, we did see those are really kind of lifting the tech shares in our region, especially with Kospi here up more than 4%, along with some of the tech-heavy gauges in Japan and Taiwan also up more than 1%. Now, before we take a look at this very interesting chart, because I want to really show you this trend or even a reversal of trends. Basically, we are seeing here the Kospi really after that sharp correction recently is up about 23% since its July low. And on the other hand of things, you are seeing the Hang Seng Index, the Hong Kong shares, after that recent rebound, actually seeing those momentum easing a bit, especially as investors continue to digest the latest earnings from Tencent that came out yesterday evening. Now, we did see Tencent's shares actually slide earlier this morning, and that's coming after investors kind of looking at the data and really focusing on how the company is doubling the spending in AI and seeing the free cash flow turning negative. So raising more concerns and questions about how profitable the business really is when it comes to AI monetization.
All right, Winnie Su in Hong Kong with the latest on those gauges details. Now back to the inflation story from the United States. U.S. inflation came in softer than expected in July, offering some relief to consumers and easing pressure on the Federal Reserve to raise interest rates. But persistent price pressures and uncertainty around oil markets continue to complicate the outlook, leaving traders focused on incoming data for clues on the Fed's next move.
Today's CPI print puts the bar for a Fed hike much higher than the bar for a hold.
I don't think this really resolves a lot. I think our lean is still that the Fed remains on hold in September.
It was comforting just that it was flat, but I think the most important issue out there is that the service sector inflation bounced back a bit.
We've essentially got Teflon inflation in America. It won't stick, and it won't stick because you've got this, you can't get a price wage spiral going if the wages won't react.
For more on this, we're now joined by Bloomberg MLife strategist David Savage. David, good morning. Good to have you with us. The data that came out yesterday, softer than a lot had expected. It was in line with estimates, though. So this inflation data, or the CPI numbers that came out yesterday, do they give the Federal Reserve room or more room to stay on hold in September?
Good morning. And I think that's certainly what the market has been telling us. So market pricing certainly, dialed back some of those Fed hike expectations, and certainly for September. But I don't think, this print alone is really going to change the sort of the direction of travel. I think what's certainly of interest is what we've seen is the long end of the U.S. Treasury curve has continued to underperform. And what we've seen actually is a steepening of the curve, because what you've had is sort of oscillating Fed expectations hold down short-end yields, but very resilient U.S. economic growth, and still now higher commodity prices, and of course some fiscal sustainability concerns start to push up the long end and keep pressure on the long end of the curve. So I think again this one print isn't going to change that, and I think already markets are starting to look forward. What impact where commodity prices are now and where U.S. growth is, where does that do for rates moving forward?
Okay, and just moving on to the big FX story, David, the yen, it is now at 159.44 against the US dollar, edging very close to that key level of 160 per dollar. So how likely, that's the big question, right? How likely are Japanese authorities to intervene again?
Yeah, I really think that the bigger question is where does the BOJ go? Because what we've seen is that interventions certainly can cause some knee-jerk reaction in dollar yen, but the door was open for the BOJ to follow with more hawkish posture, and really that opportunity was missed, and now we've seen dollar yen creep back up to 159. Now, interestingly, we have seen expectations for a hike from the BOJ in September really start to creep up. So starting in August, it was really around 20%. Now it's up to 75%. But given where, how persistently weak the yen has been, really, I think we're going to have to see real signals from the BOJ that multiple hikes might be on the table before we really start to see persistent strength come back, because otherwise I think you start to see carry traders come back in and continue to grind dollar yen higher.
Okay, so a return to fundamentals may be essential here. David, thank you as always for your time. Bloomberg MLife strategist David Savage. Now a return to the geopolitical story in the region. Oil is taking a breather after a 6-session gain, with futures edging lower as traders waited for signs of progress of reopening the Strait of Hormuz. President Donald Trump says he thinks the United States will keep total control of the waterway, betting once again that suffocating economic pressure will do the job. Meanwhile, Pakistan's defense minister has said both sides are, quote, close to some sort of arrangement over the Strait of Hormuz. To discuss all of this, we're now joined by Onur Ant, Bloomberg's managing editor for the Middle East and North Africa, joining us from Istanbul this week. Onur, good morning. Good to have you with us. The latest, again, we're seeing the back and forth continue into the second week, really, about the deal and the Strait of Hormuz and just the wider implications that President Trump has touted. Where does this back and forth leave us in terms of the wider negotiations, Onur?
I think looking at the oil markets gives you a clear idea of where we stand. Although there was a little bit of a pullback, we're still seeing oil trading near $88 a barrel after it added more than 10% over the 6 previous consecutive sessions. The broader picture hasn't really changed, Abir. The talks between the US and Iran over the reopening of the Strait of Hormuz remain essentially deadlocked, with Iran digging in on its position that the US must meet its demands to reopen the strait, and those demands are very significant, including the lifting of sanctions and an end to the war on Iran-backed groups across the Middle East, including in Gaza and Lebanon. But there is another diplomatic track I think that's worth watching, and that's the talks between Iran and Oman. We know that the key sticking point there is that Iran is seeking to collect tolls from ships that may be able to transit the Strait of Hormuz once the waterway reopens. And we got an another indication of that just a few hours ago when Iranian Foreign Ministry spokesman said that ships that want to use the strait must remediate the environmental harm that they cause, which is again another sign that they want to collect tolls from ships going forward.
And Honor, President Trump has been saying, or has been touting this line about having Iran succumb to economic pressure over the past few days. Just how realistic is it, that expectation of Iran just succumbing to the economic pressure that the U.S. is putting through? Would that shift the needle in any meaningful manner?
No, probably not a very realistic expectation, at least not in terms of the kind of impact that President Trump or others may be seeking to see in the short term. Iran has been under some form of economic pressure, a form of economic pressure for much of the last 47 years, and increasingly so in the last 10 years or so. In fact, during Trump's first term, it was called maximum pressure, and that's something that the American officials have been doubling down on. But the people that we are talking with, the consensus is that yes, there is pressure that is caused by this war on Iran. Everything from destruction of infrastructure, civilian and military, to the cost of life, high inflation, the drop in currency. But is this the kind of depreciation, or is this the kind of economic erosion that will cause a sudden shift in popular sentiment against the government after what happened just 6-7 months ago when thousands died because of the police crackdown on protesters, which were again on the streets because of economic hardships? It's very hard to say. Yes, it's very hard to answer that question. Yes, which is why a lot of the people that we are talking with don't seem to think that this is going to have the kind of impact that Trump is seeking in the short term, Abir.
All right, Honor, thank you as always for your time. Honor Ant, Bloomberg's managing editor for the Middle East and North Africa. Now, the Minister of Foreign Affairs and Expatriates for the Palestinian Authority, which runs parts of the West Bank, says a change in Israeli leadership alone will not be enough to alter the outlook for peace. I spoke exclusively with Varsen Shahin ahead of the upcoming elections, and she urged a total change, of course, in Israel's West Bank policy. Take a listen.
You can change the faces as much as you want. If the policy remains the same, then the issues remain the same. They might be beautified a bit. A new government might be doing the same, but in a different manner. What we want to see is a change of course. We want to see a government that is a partner for peace, a government that sees that it is in the best interest of Israel and the region to go into a political path that would lead to peace in the area.
So you think that even if Netanyahu goes, the situation or the outlook on things when it comes to the situation domestically, internally, that will not change? It's just a change in the face, the policy would remain the same?
If Netanyahu goes and the group with him that have a great influence on this government, and we've seen it. I mean, you have a government that is very much influenced by the settler movement, by settlers themselves who are ministers sitting on the government. Things might calm down a bit. But the issue of this expansionist and annexationist policy of Israel that needs to change so that we see a genuine change on the ground.
Okay, so therefore, have you had, or has the PA had any conversations with some of the opposition leaders?
I'm not aware if there are any direct discussions with opposition leaders, but I know there are Arabs in the 1948 areas in Israel proper that have discussions all the time. And in the final analysis, as I said, we look forward to a government that will extend its arms towards something that respects the rights of Israel's neighbors and respects the rights of the integrity of Israel and its living in the area as a normal country.
That was Palestinian Authority Foreign Minister Varsen Shahin. Now coming up, ANZ's head of FX research joins us to discuss the outlook for the yen as traders remain on intervention watch. More details ahead. This is Bloomberg. The yen is trading close to the key level of 160 per dollar. This comes as investors remain on the lookout for more intervention after U.S.-Japanese efforts to shore up the currency. So joining us now to discuss this is ANZ's head of FX research, Mahjabeen Zaman. Mahjabeen, good morning. Good to have you with us. Just starting with the yen, it is the biggest FX story for the time being, and it's a really fascinating story about how fundamentals can or should overpower those interventions that we're seeing. So when it comes to the story about the yen, again, edging very close to 160, what do you think should happen next? Are we looking for further interventions? How meaningful will those be? And what about the BOJ? How many times should we see rate hikes?
Sure. Look, I think that 160 mark, I'd be cautious in chasing that higher, just because we know that the Japanese officials are on standby to intervene, as we saw. And now we also have the U.S. On the sidelines as well to support this if needed. So, I think this at the margin will support further weakness in the yen. But is it going to support a huge turnaround in the weakness that we have seen? Clearly, interventions have been successful over the past many decades. We know that fundamentals have to change. And I think, you speak about the Bank of Japan, we are looking at one more rate hike, whether it's September or October. Even if the Bank of Japan goes ahead and hikes once or twice, and maybe they're a little bit more aggressive than the previous pace, I still don't think that's really going to help the yen, because we have seen, the Bank of Japan has been normalizing for quite some time. And that really hasn't helped the yen. I think what really has to turn or change is the long end yields in Japan, which actually have been capped for so many years. I think that's because the BOJ holds a large proportion of JGBs. I think that needs to reduce to let long end yields do what they want to do. So the pressures of the yen.
Okay, Mahjabeen, what about the U.S. dollar? It's increasingly become a political variable over the course of this war in the Middle East, not just a monetary one. So how much do you think the FX market is now positioning for a structural change in the greenback?
Yeah, look, I think a couple of things around the US dollar. First and foremost, we do think that the Fed is going to be on an extended hold. We don't see any case for hikes in the near term or cuts. The second point here is structurally, I think, there are a lot of things that are driving the dollar weaker. I think the last decade has really been about U.S. exceptionalism. I think a lot of that, over a period of time is going to start fading. And now I also think that one of the largest drivers of the dollar weakness going forward will be U.S. policy uncertainty. Surely we've got, midterms coming up, and there's going to be uncertainty around how that plays out, and all these different U.S. policies that are in play, whether it's the tariffs or other dynamics. And I think net, that's probably one of the reasons why 2025 was a softer dollar environment. And that's the same reason why we think that into the next year or two, we're going to continue seeing this weaker dollar story.
Okay, and just taking a look at the G10 sphere in when it comes to FX, Mahjabeen, what do you think is the biggest pain trade, if you were right now, given the current monetary policy environment, given the current geopolitical environment?
Yeah, look, I guess, at the margin, you're kind of stuck with the yen. It's going to be a push and pull in terms of domestic policy, domestic drivers, as well as the international intervention coming in. On the other side of things, I think the key differentiator in 2026 for FX has been the difference between energy importing currencies and energy exporting currencies. So, of course, US dollar, Aussie dollar, they've been a little bit more resilient as opposed to the euro, sterling, which have been importers and have been obviously had a negative terms of trade shock on the back of higher energy prices of the Middle East conflict.
All right, Mahjabeen, we're going to have to leave it there, but thank you as always for your time. Mahjabeen Zaman, Head of FX Research at ANZ. Now coming up, oil takes a breather after a 6-day climb. We will take a look at what's ahead for energy markets later in the show. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Cerebras tumbled in after-hours trading after the AI infrastructure firm topped average revenue estimates but projected slower growth than some investors had anticipated. The forecast was part of Cerebras' second ever quarterly earnings report as a publicly traded business, which saw its hardware business eclipsed by its cloud computing services. And Cisco shares fell in late trade despite earnings topping Wall Street estimates. It's forecast $7.5 billion in sales tied to the AI data center boom this fiscal year. That's after amassing $9.3 billion over the past 12 months. Cisco says demand tied to AI data centers remains robust, though much of its business still comes from traditional networking products. And Bloomberg has learned that Anthropic is in talks to buy startup Decart AI after about $6 billion. Decart's ship efficiency software would reportedly help Anthropic's infrastructure absorb more demand for its AI models. If finalized, the deal would mark Anthropic's largest known acquisition. And Tencent shares slipped after the company more than doubled AI spending, underscoring the mounting cost of trying to catch up with rivals. China's largest company hiked capital expenditure by 176% on AI projects and computing in the June quarter. Now a look into risk assets before we head to our break. S&P futures flat, Nasdaq 100 also flat, Dow Jones flat to the downside, and Euro Stoxx 50 futures 4/10 higher. Now coming up, as traders wait for signs of progress on reopening the Strait of Hormuz, we will take a look at the global outlook for energy markets with Sparta Commodities June Gall. That is coming up next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Hormuz deadlock. Oil edges lower after a 6-session rally. Traders wait for signs of progress as Washington and Tehran harden their positions. Asian stocks rise as a subdued U.S. inflation report eases fears of an imminent Fed rate hike. South Korea's Kospi is entering a technical bull market on a rebound in the AI trade. And the yen is under pressure as the currency approaches the key 160 level against the U.S. dollar. Traders brace for possible intervention from Tokyo and Washington. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abramar in Dubai. Markets still not doing much in the grander scheme of the environment that we're seeing, or that we have been seeing over the past few months, really, but also over the past few weeks. S&P futures completely flat or flat to the upside. We did see S&P 500 3/10 higher yesterday. Nasdaq 100 7/10 higher, so rebounding slightly from moves that we had seen over the past couple of weeks. Individual names continue to be the case and continue to be interesting in the United States. Cisco is one of those names. It dropped 4%, about 4% in after-hour trading. That is despite a beat in its earnings, but it disappointed analysts and investors who were expecting a little bit more. Cerebras is another name that we are keeping an eye on. It dropped about 17% after reporting that drop in its hardware revenue. And then Asian equities are gaining 1% this morning. The Kospi in South Korea is the culprit. We had said in the headlines that it was set to enter that technical bull market territory. Winnie, in just a second, will talk to us about what is happening there. And then Brent crude prices are moderating by the minute. As a matter of fact, they were declining 1% in the early hours of this morning, but are now 0.2 lower. So a return to a slightly higher Brent crude price, about $89 on the barrel. The geopolitical situation in the Middle East continues to be unclear. That is it in a nutshell. And then the yield on the 10-year Treasury is 4.68%, dropping 2 basis points this morning. The CPI report yesterday, subdued. We've spoken about that. 0.2 rise in July compared to June, in line with estimates, but money markets are now assigning less than a 50% chance of a rate hike by the Federal Reserve in September. So something to continue to keep an eye out on. But for a deep dive into what is happening in Asian markets this morning, we've got Winnie Su again in our Hong Kong studio. Winnie?
Yeah, morning, Abir. Well, a very strong session in Asia today as we see the MSCI Asia up about 1%, taking it to its highest level in about 5 weeks. Now, as you just mentioned, a pretty constructive macro backdrop, especially with the US CPI numbers pointing to traders walking back their bets for the Fed to raise rates. So overall, that is good for risk assets, especially for tech stocks. That's why we are seeing Korean stocks here leading gains today, up about 4%. Now, other factors are also supporting the Korean market because we did see that leverage bets being washed out. We do have expectation for the Samsung Electronics and SK Hynix to announce big shareholder return plans, as well as seeing a bit lower volatility in the market. So all of this really shows why we are seeing the Korean market outperforming today. However, on the flip side of things, when we see a bit of weakness is in the tech shares in Hong Kong. As we flip the board and take a look at where that is trading, we have Tencent, especially today, being a drag, down about 4% after earnings yesterday showing that they are doubling the spending when it comes to AI and that free cash flow turning negative as well. So investors are really concerned about if all these spending will really be justified by their AI monetization plan. Cross-asset wise, we are seeing Asia bonds following those moves in Treasury, so yields are ticking lower. Meanwhile, the Japanese yen really still hovering right below that 160 level against the dollar. So more risk when it comes to potential interventions by authorities. Back to you, Abir.
All right, Winnie Su in Hong Kong with her usual market update. Now back to oil. Oil is taking a breather after a 6-day gain as traders wait for signs of progress on reopening the Strait of Hormuz and the resumption of pre-war flows of oil and gas. And the price reprieve comes as the International Energy Agency said the global oil market faces a shortfall of 1.8 million barrels a day this quarter. That is double an earlier projection. Let's get more on this story from Bloomberg energy, commodity, and shipping reporter Yongchan Chen. Yongchan, good morning. Good to have you with us. When it comes to the IEA report that we saw yesterday, what else caught your attention?
So the IEA report, big landmark report that they issue every month that lots of traders in the market look out for each time they release it. I think this month, some of the key insights that they were talking about is in fact how they were seeing both demand destruction as well as lower supply. Taken together, however, you do see the IEA forecasting that we are going to face a shortfall of supply, but that's because the amount of supply that is lost because of the Iran war is going to overshadow kind of the demand destruction, the lower consumption from consumers because of the higher prices. So quite a mixed picture, but overall, the Iran war is definitely what is clouding the outlook and what is on traders' minds at the moment. The IEA report, of course, highlighting that, but of course, in general, traders are still looking at the state of negotiations, a bit of a deadlock, a lot of uncertainty as to exactly what's going on and how, frankly, the market's going to price things going forward.
Yeah, and Yongchen, we've been obviously reporting out of the Middle East about that deal and the uncertainty around the remarks by both President Trump and the Iranian side. But then when it comes to the physical structure of how things are in the Strait of Hormuz, what shipments are currently actually making it through the waterway?
Yeah, that's a really good question. So my colleague Javier Blas, he just had a column basically arguing that, in fact, while on paper the Strait of Hormuz is closed, in actuality there is a lot of oil that is coming out. And these tankers come out of the Strait of Hormuz using so-called dark tactics. Sometimes they come out, under the cover of night. They might turn off their satellite transponders so as not to get spotted by anyone. So there is a lot of oil that is coming out. Particularly, I would say the UAE has been the most successful at getting barrels out of the Middle East. Now, it has been getting its own barrels out, its offshore crude from its own production. But what we've had some reporting on recently is that the UAE is also getting supplies from other producers, namely Iraq. Iraq, of course, being its port, rather, being the deepest within the Persian Gulf, so it's had the most trouble getting it out. So the UAE is even now getting supplies from Iraq out. It's the most successful at getting supplies, to the global market, and it's what has been kind of a bit of a lifeline for the global market that has been so starved of Middle Eastern oil.
Okay, Yongchen, thank you for monitoring that situation for us, Bloomberg's Yongchen Chen. Now, for a deeper dive on the current outlook on oil specifically, I'm now joined by June Goss, Senior Oil Market Analyst at Sparta Commodities. June, good morning. Good to have you with us. You're hearing the conversation I was having with my colleague just now about exactly what is happening in the Strait of Hormuz and the situation around it and the reopening. The IAA report that came out, it does assume eventually a de-escalation and a reopening. But how vulnerable is that to, let's say, the next couple of months, the Strait of Hormuz continuing to be prone to these mass closures that we've been seeing?
I guess the question is about how sustainable will be the situation once we see a resumption of flow. We probably can take a leaf back from June, when we did have that mini reopening occur. And we saw, a big flood of oil, I would say, coming out from the Strait of Hormuz because of the trapped vessels there. Now, we probably won't see that same scenario repeat at the same magnitude as before because there are less vessels that are trapped now compared to that time. And then we also need to see that it will not just be open for 3 weeks. We need to see a longer period of time for sustainability. We need to see the shipping industry getting more comfortable with their position to come back on sustainable terms in order to allow for the production shut-ins to resume their flow. Okay. So in the EIA STO report, we did see like 5.5 million barrels per day of supply production shut-in that has to recover as well.
Okay, June, let's assume the situation gets much worse in the Middle East. We see even further disruption out of the Strait of Hormuz. We also are now dealing with the Red Sea. What do you think is the first oil market assumption that gets broken? Is it spare capacity? Is it going to be shipping? Is it going to be demand elasticity?
The demand elasticity part will come in when oil prices get too high. So we have now seen the crude price didn't really move that much. It's sub $100 per barrel and then it goes back down very quickly. But it's in the product side that is where it will hit consumers the hardest, and that's when the demand is. Obviously, the top of the market is diesel. Diesel is at crazy cracks level, like $70 per barrel or so, which means that it is almost double the price of crude itself, and that would hit consumer demand, and then we can see potentially more demand destruction coming from that point. But until we reach that threshold, which currently we do not see as a very strong point yet, is not that strong signal for consumers at this point.
Okay, interesting. And I do want to focus in on the demand bit just a little bit. And when it comes to China and demand from China weakening over since the start of the year, do you think that the market is really underestimating the fundamentals here and the lack of demand that we're seeing out of that part of the world?
China's story has been quite interesting. Their demand, so-called demand destruction, is seen from the reduction of crude imports to the tune of, reducing almost 4 million barrels per day. So some of this shortfall is, number one, they have not been stockpiling crude. So that's about 1 to 1.5 million barrels per day. There is a stronger acceleration of the EV trend, both in the mogas for transport and also for diesel replacement in heavy-duty trucks. That is actually, it's not something new, but an acceleration of that trend. And finally, for the petrochemical side, they have switched out from taking more naphtha into chemicals and instead replacing that with coal to olefins. So all this basically adds up to the demand destruction that we see from the crude side.
So, June, what ultimately wins? Because in the IEA report, they point out the collapse in supply, but they also point out the collapse in demand. So when it comes to, again, the return in fundamentals, what do you think ultimately wins here?
I think the demand will come off, but it's currently not enough to offset the supply loss that we are seeing. So it does seem to be a fairly bullish setup in the current scenario. We are already, in the 6th month of the Hormuz closure. So the amount of crude that we need to even replenish the lost barrels for the general SPR and also for commercial storage is something that it will be a demand trend for the forward years that should not be discounted as well.
Okay. June, interesting take. Thank you so much for your time with us this morning. June Goss, Senior Oil Market Analyst at Sparta Commodities. Now, coming up, Nigeria's president signs an executive order offering tax breaks to oil companies to unfreeze deep water projects. We'll bring you the latest details on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Some breaking news lines on the Bloomberg terminal just now about Japan. Takaichi's government is said to support a faster Bank of Japan rate hike. That is the lines that we're getting right now. A Bloomberg news story about a return to fundamentals, really, to support the yen that is edging very close to that $160 on the barrel. Edging very close to the 160 against the US dollar. Prime Minister Sanai Takaichi's government saying that it's supportive of a near-term rate hike by the Bank of Japan, with the next move likely either in September or in October. This is Bloomberg reporting out of sources. Again, just some now breaking news lines crossing the Bloomberg terminal. You're taking a look at the yen, 159.35, moderating from what we have seen earlier on the show, but still very, very close to that key 160 level against the US dollar. Now back to our top stories. Nigeria is offering significant tax incentives on new deepwater oil and gas projects to attract $50 billion in foreign investments. President Bola Tinubu hopes these measures will help revitalize the nation's struggling oil sector and reverse years of declining production. To discuss this story, we now have our chief Africa correspondent, Jennifer Zapasaja, joining us now from Johannesburg. Jen, these measures, will they be sufficient?
Well, I think when you speak to, if you look at what we heard from President Tinubu, he is hoping as such, especially if you consider the years in which many of these issues were really dogging and holding back any sort of progress for Nigeria's crude sector, the biggest crude exporter or the biggest crude producer in Africa. And so what we've heard from experts is really that this could potentially be a reset for oil profits in Nigeria. It offers a bit more favorability and a bit more balance between contractors and governments, and materially could improve investment returns longer term. What we've seen is in the past, there's been a lot of issues around things, not just tax policy, but there's also been crude theft. There's also been vandalism of pipeline infrastructure and aging infrastructure. And so it's not just tax policy that has been a hindrance to any sort of growth of the sector. It's been a wide-ranging list of issues. And so the real question that we've been speaking with experts about is whether or not this produces actually new investments into new oil fields, or whether or not this just provides additional investment incentives and tax benefits. And so then we do see investors coming into projects that are already there. And so that's really going to be the test that we're going to be watching for. And of course, what President Tinubu and investors are probably watching very close for as well.
Jen, can you just tell us a little bit more why companies have held off investments in the country's oil fields?
Well, if you take a look at what President Tinubu said on Wednesday, it really gets to what we've spoken to a lot of investors about in the past, some of the issues. So he said those countries that attract long-term investment aren't necessarily those with the greatest natural resources. It is those that provide the greatest certainty. And so a lot of the challenge in the past has been the unpredictability and the uncertainty around regulatory and structural frameworks for the Nigerian oil sector. That really led to a lot of investors being hesitant to invest longer term into some of these projects because they didn't have a clear long-term framework for what this would look like in 5 or 10 years, because of course we know these are not short-term projects. And so switching from what used to be a project-by-project negotiations into more capital-intensive and wide-ranging investment returns and discussions between both contractors and the government perhaps provides a bit more certainty and a bit more clarity as to what this looks like moving forward. Again, the true test will be whether or not the investments are in some of the mature oil fields that are already in existence, or whether or not we see a bit more of the investment coming into some new projects.
All right, Jen, we're going to have to leave it there. Thank you for that update. Jennifer Safasadra, our Chief Africa Correspondent in Johannesburg. Now, coming up, record-breaking heat is drying up 2 of Europe's busiest waterway. Barges carrying cargo are facing disruptions, and we'll tell you what that means for the industry. That is coming up next. This is Bloomberg. Extreme heat is crippling Europe's busiest waterways. On the Rhine, water levels at Kaup have hit historic lows, forcing barges carrying oil and chemicals to lighten their loads and sending freight rates soaring. We have Bloomberg's Chief Europe Correspondent Oliver Krug joining us now from Kaup, Germany. Ollie, good morning. Good to have you with us. What kind of economic hit are we talking about here?
Yeah, so listen, when we talk about the Rhine River, this is one of the most important industrial waterways across Europe. It comes down from the North Sea through the Netherlands, down through Germany, into France, and of course then down into Switzerland, and also connects with a series of canals to the Danube, which runs all the way to the Black Sea. So this is one of the most major sort of arteries of the waterways within Germany and within industrialized Europe, and of course services a lot of the main industrial companies in the southwest of Germany, including BASF, including ThyssenKrupp, and of course, Rheinmetall, named after the region and the river. And of course, what you can see behind me here is this little town of Kaup. But in that tower there, you can see the waterway gauging station. That is the level of water within the Rhine River. It is now, as you can see, reading at 11 centimeters. That is the lowest level we've had since the 1880s when these records began. And the last time we had this kind of record was back in 2018. The reason that people are very concerned about this is when we reached that last record back in 2018, that was already in October. We're obviously now in mid-August. So there's not only certainly a sort of extremity of this. This is the lowest level we've ever seen in terms of the Rhine River and Kalb, which is the shallowest point. So effectively, this is a point at which this river would be bisected, where ships effectively with any kind of meaningful cargo could not pass this point, and as a consequence, it would bisect the waterway. Obviously, it happened last time in October at the lowest level, and this is now already in August. So some real concerns that this could drag on for a longer period of time. In terms of companies, they've adapted themselves a little bit. This is obviously now a risk that is on their horizon. That being said, we've heard from ThyssenKrupp, we've heard that they could have supply disruptions, that this could affect the ability of materials to get to customers and to get to their plants. But of course, BASF has also said, that massive chemical company here in Germany, that this could actually force a force majeure for them. So they're not ruling that out for this year.
All right. Bloomberg's Ollie Crook there in front of the Rhine with the latest updates on those heat waves we've been seeing in Europe. Thank you, as always, for your time. Now, before we head to the end of our show, a quick look at where risk assets are sitting this morning, particularly the yen, with that story that we just broke moments ago, that level. The yen is currently at 159.32, so strengthening against the US dollar. That is the impact after that line, or those lines broke out, about what Prime Minister Takeichi's government may be considering doing, which is it is set to support a faster BOJ rate hike, possibly raising questions for that decision in September and what the BOJ will decide to do. We've spoken multiple times about that and essentially the return to fundamentals. When it comes to equity futures, S&P is still trading flat-ish. Other U.S. benchmarks doing pretty much the same thing. And Euro Stoxx 50 futures 0.4 higher this morning. That is it for Horizons Middle East and Africa this morning. Stay with us for Daybreak Europe. This is Bloomberg.